Hey everyone, welcome back to Corporate Decoder, the place where we expose the secrets buried in quarterly reports, and sometimes you might just learn that a company's been playing a shell game with its numbers. Today we're diving into Nuvve Holding Corp and their latest filing, which has a little bit of everything from director resignations to a nail-biting situation with the stock market itself. Stick around to find out if they managed to escape the dreaded delisting. Let's jump right in. You know how sometimes you think a company is on solid ground and then suddenly a director steps down? Well, that is exactly what happened here. So, on the 7th of January of 2026, a Mr. James Altuche decided to leave the board of Nuvve Holding Corp. The good news, or at least the less dramatic news, is that the company says his departure wasn't due to any disagreements or problems with how Nuvve is being run. It is always a bit of a question mark when someone leaves, but for now, we'll take their word for it. Now, the really juicy part of this report is about Nuvve's battle to stay listed on the Nasdaq stock exchange. Companies have to meet certain financial standards to keep their shares trading on these big exchanges, and it looks like Nuvve had a bit of a scare. Here is the deal. On the 6th of January of 2026, Nuvve got a letter from Nasdaq. Now, this isn't just any letter. This is a letter from the Nasdaq hearings panel. They told Nuvve that the company was actually in compliance with two important Nasdaq rules. One is called the minimum stockholders' equity rule, which basically means they had enough money or assets to cover their debts and keep trading. The other rule is also about meeting certain financial benchmarks. So at that point they were okay, but here is where it gets tense. Even though they met the requirements, Nasdaq put them on a 1-year monitoring period. Think of it like being on probation. If Nuvve slips up again during this year, and specifically if they fall out of compliance with that minimum stockholders' equity rule, they won't get any extra chances to fix it. Their stock could be delisted, meaning it wouldn't be traded on Nasdaq anymore. That is a huge blow for any company, often leading to a sharp drop in stock value and making it harder to raise money. So the stakes were incredibly high. They had to stay on the right side of Nasdaq's rules for a full year starting the 6th of January 2026. Imagine the pressure on the management team knowing that one misstep could lead to losing their spot on one of the most important stock exchanges in the world. And then just a couple of days later, on the 8th of January, Nuvve announced they've regained compliance. This is fantastic news for Nuvve. It means whatever measures they took, whether it was improving their financial position or perhaps some strategic financial maneuvering, it worked. They managed to satisfy Nasdaq's requirements and avoid the immediate threat of delisting. This is a huge relief, as being delisted is a serious red flag for investors and can make it very difficult to operate. The filing also lists out the exhibits. Scroll exhibit number 99.1 scroll. The most important one here is exhibit 99.1, which is the press release they issued about regaining compliance. This is what they're using to communicate this positive news to the public. Scroll exhibit number 104 fine scroll, then there is exhibit 104. Which is the interactive data file in XBRL format. This is basically the machine-readable version of the report that is required for regulatory filings, but it is not something most investors will directly look at. Now, let's look at the financials themselves. Even though the specifics aren't laid out in detail in this particular report, we know the reason for the Nasdaq concern. Companies need to maintain a certain level of stockholders' equity, which is essentially the value of the company that belongs to the shareholders. If this value drops too low, it signals financial distress. For example, if a company's equity falls below a certain threshold, say $2 million, or if its market value has been too low for too long, Nasdaq can initiate delisting procedures. The fact that they were in this situation suggests they were likely struggling with profitability or had significant expenses that were eroding their equity. Regaining compliance means they've likely improved their financial standing, perhaps through cost-cutting measures, successful new deals, or even by issuing more stock, which would increase their equity, though that can sometimes dilute existing shareholder value. So, what is the big picture here? Nuvve Holding Corp has been through a significant challenge with Nasdaq. The departure of a director, while not officially tied to problems, is always something to watch. The fact that they were on the verge of being delisted and then managed to quickly regain compliance is a testament to their ability to react to financial pressures, or perhaps an indication that the initial non-compliance was a temporary issue. The real question for investors now is whether this is a sustained turnaround or a temporary fix. The mandatory panel monitor for a year means they still need to prove their stability. Any future filings that show a decline in stockholders' equity could quickly put them back in hot water. It is a positive sign they avoided the immediate delisting, but vigilance will be key for Nuvve moving forward. Alright, that is our breakdown of Nuvve Holding Corp's latest filing. What is your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.